Hello, good morning. It's Tuesday the 23rd. I'm FxPlew and this is the market brief. So Citibank have been on. They think inflation could reach 18% with the continued rise in energy costs. The wholesale gas price has increased 25% in the past week alone, and Citibank, their forecasts would see inflation rival the mid-1970s when the oil price, the OPEC oil embargo, drove prices up 300%. Citibank think the energy price cap will be raised to more than £4,500 in January and to around £5,800 in April. And to put that in perspective, the current cap is under £2,000. So with all the higher wage demands going on right now, from criminal court barristers through to Felixstowe dock workers, some pretty bleak forecasts have accompanied this call on inflation. If wage demands kept pace, the Bank of England could be forced to raise rates to 7.5%. 7.5%. That's over 4 times the current level. The Bank of England has already acknowledged a recession is on the way, so all they can do is really try and limit the effect. But one of the first orders of business for the new Prime Minister will be to increase gas production from the North Sea. Production there was reduced in line with green energy policy, but perhaps the green credentials may need to take a backseat while they try and avert economic catastrophe. In the market, sterling was battered by another bout of risk aversion. We closed at 117.65 against the dollar yesterday. That's the lowest close since March 2020, when all the lockdowns first started. We're down to 117.35 on the open. We're holding up slightly better against the euro. We're 118.40 there. And euro dollar dropped beneath parity. We open at 99.15 this morning. The Fed minutes seem to suggest that the Fed will continue tightening monetary policy, but the size of the rate hikes may need to begin to fall. However, their last meeting was almost 7 weeks ago, and the global environment where energy prices are rising almost exponentially means that is now pretty much out of date. As such, Powell's policy speech at Jackson Hole on Friday is eagerly anticipated by the financial markets. However, he's unlikely to change the core message of current Fed policy, where the primary goal remains to bring inflation back close to their 2% target, regardless of the increasing recession risk. So Friday's speech could easily be a bit of an anticlimax. The dollar index is driving higher. Another drop in global appetite drove it to 109.10 yesterday, and euro dollar breaking parity means that the 110 level is firmly in the crosshairs once again. Right, that's it from me. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FxPlew.